Good afternoon and welcome to the BEEKS Financial Cloud Group PLC financial results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time using the Q&A tab situated on the top right corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll. And I would now like to hand you over to CEO Gordon MacArthur. Good afternoon to you.
Thank you and welcome, folks. Thanks for joining. Good afternoon. I'm going to kick off and cover the first few slides as usual. Then Fraser's going to cover the financials as we go through the deck, and then we've got some questions already submitted at the end, so we'll cover them at the end. So let me just go into the first couple of slides. So, a bit of background on what do we do, who are BEEKS. So, cloud computing company focused solely on capital markets. Cloud computing or infrastructure as a service, different terms, same thing. We provide cloud computing resources, connectivity, and analytics for mission critical trading infrastructure, from small hedge funds, prop shops, brokers, up to large mid-sized banks, and most recently some of the largest exchanges in the world. So we deploy infrastructure in financial data centers around the globe. We connect to various trading venues within the data centers, and we connect our data centers together around the world using a wide area network, or the BEEKS backbone, that we take from various carriers around the world. So what does the business do in a little bit more detail? So the majority of our revenue comes from trading infrastructure. That is selling dedicated servers, virtual machines, networking to various size of organizations. We also, as I said, have a backbone that connects all of our data centers, so we will sell that as a value-add service. About 5 years ago, we bought a company called Velocimetrics, which is now been rebranded as BEEKS Analytics. So we have a network and trading infrastructure analytics package, and we do a small amount of professional services as we deliver some of the large projects that we get involved in. However, 90% of our revenue is derived from that core trading infrastructure deployment, whether it be private cloud, public cloud, or proximity to exchange. And we'll cover, as we go through the deck, a little bit more detail on the different product segments that we have. So this slide kind of breaks it down into the product groups. So the business started in the kind of public and private cloud provision. Public cloud is, completely shared infrastructure, shared networking, shared hosts under virtual machine layers that clients can buy over the internet or via a portal, spin it up, spin it down in 5-10 minutes, and you have an environment no different to an AWS or a Google or a Microsoft Azure, just different in that we connect it directly to all of the exchanges and various trading venues around the world. And that's been the backbone of the company, right? That, for the last, since we IPO'd 6 or 7 years ago now, that's where the majority of the growth has come from. Still, I think about 80% of our revenue still performed very well over the last period. And these deals can be month to month. Public cloud is month to month. Private cloud, where we will design a little bit more of a bespoke environment for maybe a slightly larger organization. We tie them into 12, 24, 36 month type terms of contract, and the size of these deals can vary from anywhere tiny to £1,000 a month to millions and millions of pounds a year. And as I say, it's still the majority of the lion's share of the revenue pile that we delivered last year. And for those of you that have been following us for any time now, Proximity Cloud is now kind of 3 years old, 2.5 to 3 years old, I would say, and is a bespoke infrastructure for a single client. So it's a single tenant platform that is delivered in a bespoke cabinet solely and exclusively for the use of one organisation, and really was on the demands of the larger clients who security and compliance departments do not like the shared infrastructure model. Doesn't matter how flexible it is, the fact that there are other clients on that infrastructure is a big red mark in terms of security and compliance. So we released Proximity Cloud as a standalone cabinet-based infrastructure, end-to-end trading infrastructure a few years ago. And again, you know, it's much larger ticket size in terms of we talk about total contract value for Proximity Cloud because it tends to be a 3 to 5 year term, and these can be anywhere between 1 to 5 and even larger, right? £1 million of TCV, anywhere up to 5, and as clients extend the usage of it, that can certainly grow. And Proximity Cloud is the same technology stack as Exchange Cloud, right? It's the same underlying technology that sits in both product offerings. The difference is Exchange Cloud is packaged and is targeted at exchanges to give them a cloud environment in their own data center. You know, most of the world's matching engines run, especially in equities and derivatives, run in exchange data centers. They do not have a cloud platform within that data center, right? And AWS or Google or Azure sits in their own data centers, which from a speed point of view and a connectivity point of view is just too far away for a lot of the participants to use for execution. Fine for, you know, generic hyperscalers are fine for back office functions and things like that. But when it comes to trade execution, speed matters, and you really need to be in the same building as the exchange. So Exchange Cloud, a couple of years old now, and really took the Proximity Cloud footprint and turned it into a multi-homed environment. So that means we can deploy that into an exchange's data center, light it up, and white label it as the exchange's cloud offering. Our strapline here is we enable exchanges to become the cloud rather than, you know, moving to the cloud, which I think is a bit of a fallacy for high-end matching. So, you know, a lot of the narrative over the last couple of years is the significant opportunity that we see with Exchange Cloud, and we'll cover it as we go through the presentation. But these deals very large in size and scale, anywhere between 3 million to 20 million of TCV, and can go larger, right? We'll talk a bit more about the success of the Johannesburg Stock Exchange as we go through, and that's bumping up to the upper ends of what we see in terms of TCV. So, you know, if you kind of look at it, I mean, we have small, medium, large type of deployments, right? Various packaged solutions for various different use cases and customer types in our world. And, you know, we've had a relatively successful year across all three of the product lines. So just a quick high-level view of the financials, and Fraser will go into much more detail as we go through. So year-on-year revenue was up 27%. Monthly committed run rate, which is the kind of one of our key metrics that we monitor at the board, and the overall health of the business, up 18%. And very pleasingly, probably since one of the first periods since we IPO'd, you know, we are now cash generative, and our net cash has gone from 4.4 to 6.6 million. So, you know, if you look at the diagram on the right, I think that's not quite since IPO, but shows the revenue growth. It's been fairly consistent since we IPO'd. We've always been, you know, we've had some better years and some worse years, and, you know, we talked to an investor about this earlier on today. You know, I think if you look on average, the business has grown on average 25 to 30% year on year since we IPO'd, and that goes back before IPO as well. We've always been relatively consistent on that overall revenue growth year on year, which is fairly unusual. We've had some big Exchange Cloud and Proximity Cloud wins throughout the year, as we've announced. A lot of land and expand success. And as we said in the statement yesterday morning, we are in the kind of final stages of discussions and contracting with a number of the other large global exchanges around the world. So this is a slide that we thought we would put in just to try and explain and give some context around why we think Exchange Cloud is the most important thing for us as a business going forward. What is the opportunity there? What does it look like? And this one is based on, you know, our kind of flagship client, Johannesburg Stock Exchange, JSE, who really were the first exchange to enable Exchange Cloud in their core matching engine data center, right? And that was signed in June 2023. Now, JSE are not, you know, by their own admission and by their own statistics, are not the largest exchange in the world, right? And when we first started, you know, putting Exchange Cloud together, we were trying to size the opportunity, and we looked at, you know, these emerging markets exchanges like JSE, and we thought there's maybe a £2 to £5 million opportunity for us in that first phase of the contract, right? The first 4 or 5 years. That's proven to be pleasingly not very optimistic at all. So JSE signed the first part of the deal in June 2023. They have extended their contract a number of times now. They filled the capacity a number of times. They have a very significant pipeline of future business that we're working on with them jointly. And as we announced in August, they've now signed for a second site. So what a lot of the exchanges look at Exchange Cloud as a way to get small clients in trading, testing on the exchange fast and quickly without a lot of effort. But what we've seen in the JSE implementation is a lot of the big South African and African banks and international banks have actually been the biggest drivers of growth, right? You know, they all have footprints in colocation, or they want to have footprints in colocation, and they've really embraced Colo 2.0, as JSE call it. So that has led to JSE licensing a second site because, you know, from a compliance and regulation point of view, banks need to have both primary and DR capability for their trading infrastructure. So we have signed another extension of the JSE contract that we announced in August for a second site. So what does it all mean, right? You know, looking back at where we thought this contract would go a few years ago when you know, we were first negotiating and signing it, it's grown materially, right? And, you know, JSE fully expect to have 10 to 15 cabinets in the production facility in the next couple of years and 5 to 10 in that DR site. So, you know, it's roughly $1 million of TCV per cabinet. So, you know, we revised our estimates for the JSE on an emerging market exchange upwards from 2 to 5 to 15 to 20, right? So maybe £3 or £4 million, £3 to £5 million per annum. And, you know, I think when we started on the Exchange Cloud journey, we looked at the big mega exchanges, New York's, London's, and thought that's where the primary source of revenue would come from. But actually, I think we're equally as excited about the emerging markets. And JSE's really opened our eyes and a lot of the other exchanges' eyes to the opportunity both for us and for them to onboard clients that wouldn't have traded on the exchange without having Exchange Cloud available. And I think there's more slides on emerging markets as we go. We've been asked a number of times, and I know it's a fairly niche world and a bit of an ethereal world, that it's not, you know, it's not an everyday conversation, not an everyday company, right? Because some of it's quite difficult to understand. So we've put some text together about why BEEKS in this space, why are we winning, why can't other people do it, you know, why is there not much more competition than there seems to be. So, you know, from end to end across, you know, how we build the technology, you know, there's technological barriers to doing this as other IT companies, right? Most networking, without getting into the weeds of technical understanding of this. Most networking works on what's called a unicast basis. So, point A talks to point B and vice versa. That doesn't work in exchange land, right? So exchanges have got to use what's called multicast, right? An exchange has an obligation, a legal responsibility that every member gets the same piece of information, pricing or whatever it is, at the same time, right? So the only way of doing that is using what's called a multicast protocol. So multicast is basically a broadcast protocol that sends out to hundreds of thousands of endpoints the same information at the same time. There's very few networks around the world that use multicast other than in financial markets. So our networking, our entire stack is built around multicast networking. So hyperscalers really struggle their networks are not built and suitable for a multicast type of setup. So, from the core underlying technology, we have built everything in Exchange Cloud and Proximity Cloud to match capital markets requirements, right? Speed is important, so latency is minimized as much as we can. So everything we do from end to end is based around supporting and having high performance cloud capability for capital markets. We would never win a unicast based requirement for an email platform, a CRM platform, a back office platform, because our technology equally is not built to cope with it and to be in the best place to do it. Our delivery model is very different as well, especially in Exchange Cloud. So the hyperscalers have been banging on for years about exchanges moving to the cloud, and I don't blame them, right? They see it as a multi-billion-dollar opportunity to try and get execution into the cloud, but that's their opportunity, right? If you look at the big larger exchanges, their co-location and market data business is worth hundreds of millions of dollars to them. The hyperscalers want that, right? And for however long I can remember now, they've been talking about exchanges execution moving into the cloud. We don't think that's ever going to happen. There's no real meaningful high-end matching going on in the cloud, despite the best marketing efforts of the hyperscalers. So we've taken that into consideration, and what we're saying is you need a cloud platform, right? Like, people want to embrace cloud computing in trading infrastructure. So we enable the exchange to white label our product and offer it as their own cloud platform, right? So we sell it once to the exchange. They're our client. We work with them supporting their end clients, but ultimately it's their cloud platform powered by BEEKS. So the delivery model is completely different. What we're saying is we are not asking you to move and give all your revenue to us. What we're saying is we're giving you an extra source of revenue by giving you a cloud platform that you will make it easier for your participants to trade on your exchange, but also make money from. So it's a very different delivery model. We are now tried and tested, right? We've got referenceability, we've got very happy clients, we've got clients that are more than happy to talk to each other. And it's quite strange in exchange land because a lot of them don't compete. Like GSE don't compete with Singapore, they don't compete with Australia or Toronto. So they all talk, they all share stories. So, we are now, I would say, the kind of known entity in enabling exchanges to become the cloud. And this is a big deal, right? This is us, an exchange, white labeling our platform under their name, providing it to their clients that transacts billions and billions of dollars of trades per second. Experimenting in this area is not something that exchanges are going to do, right? That's why it's taken us a couple of years to get the first few on board, the first few happy, because it's having referenceability and performance metrics and stats that shows what that has done for liquidity and flow on the exchange is a big deal, right? And there genuinely isn't another product out there that's multi-homed based on exchanges becoming the cloud and sitting in their environment. So we built it from scratch. It's got our own proprietary software in there, our own proprietary analytics in there. So there's a lot of barriers to entry, and why another generic IT company can't just come along and compete with us in the exchange cloud space. So yeah, I mean, just a little bit on emerging markets. So as I said earlier, on day one we kind of targeted, and we continue to target the big, very well-known mega exchanges. But what we've found is it's easy for a bank to do business in New York and London. They have staff there, they have offices there, they have entities there. But if you look at places like South Africa, you look at places like Mexico, Saudi Arabia, Malaysia, the banks maybe don't even have an entity, right? So how do you import infrastructure? How do you support trading on that exchange, enabling your service to be available through the exchange? Is difficult. So that our use case resonates a lot in emerging markets because people, they're underexploited, and people looking at, whether they're offering it a service or looking to gain alpha on the exchange and trade themselves. But there's barriers to entry. So there's demand there from customers wanting to embrace cloud technology in these smaller exchanges that are maybe less well known. So I think if we look around the world, and a lot of the engagements that we're having at the moment is with a lot of emerging market exchanges, and you go back to the GSE numbers, if every emerging market exchange is going to be worth 15 to 20 to 25 million, that's just as big an opportunity as the top 10 more well-known exchanges. And they can move faster, there's less red tape, there's less regulation. So we've got a real conscious effort into targeting these emerging market exchanges. And we've scaled up a little bit to support that as well. So hired Adam Bradley, who's now head of APAC. So Adam ran the Australian Stock Exchange co-location facility commercially for 10, 15 years. So very experienced, very well known. Zek, who we've taken as head of pre-sales for Exchange and Props Cloud, ex-AWS, ex-NASDAQ. So again, good exchange experience. And Jerry, who heads up the Americas, who's working with a lot of the larger North and South American exchanges. So we'll continue to expand the headcount with exchange-based experience, and particularly targeting emerging markets. One thing we've kind of started calling out, we are in the early days of building out an AI and ML product, so based around our analytics product. So we capture a lot of very fine-grained data from a bank or an exchange or whoever it is that's running our analytics products. But it's the amount of data is vast. It's very different. It's very granular level stuff. It's very difficult to do anything with. So we've been working with a number of clients to say, if we capture that data at the edge, i.e. at the trading venues, and we allow you to run AI and ML models on it that we will build for you and with you, what do you want to see from it, right? And the messaging back is a lot of similarity to no matter who we talk to. So it's things like anomaly detection, root cause analysis on problems within the exchange infrastructure or the banking infrastructure. And this is very difficult to do in real time because of the size and the complexity of the data. So we're at the early stages of building out an AI and ML product around not just our proprietary analytics, but some of the other offerings out in the marketplace, where we will try and give real-time, at-scale, actionable insights on what is going on within trading infrastructures and with some machine learning specialities there. We're probably six months away from version 1 of the production product. It's in development at the moment, and we're not jumping on an AI bandwagon. We've never been that company, but there is certainly something there. How significant it is, I think we're in too early days to tell. So we're not betting the house on it. We're investing some a few $1 million over the next few periods to get the product to a position where we can start PLCing and working with a number of already identified clients on it. All right, and I'll hand over to Fraser to start with through the numbers.
Sure, right. Thanks, Gordon. Good afternoon, everyone. Fraser McDonald, CFO at BEEKS. So I'll cover I'll cover some of the key financials, and obviously happy to take questions on anything in terms of more detail towards the end. So yeah, as Gordon said, since IPO we've typically grown about 25 to 30%. So another good year. Obviously as the numbers get bigger, that percentage gets harder to achieve. So 27% is has been a good year, and that's been about £6 million in terms of revenue growth. And pleasingly, that's relatively well split across public and private, which grew about 3 million, and then Prox and Exchange, which grew at a similar level. Proximity Exchange, again, is where we see, where we really grow. And just now that as a percentage of revenue is only about 12%. So as we move forward, we expect that to be a bigger percentage of our overall revenue. Committed revenue again is up. So that's mainly the public-private run rate business, which again has been consistent, and that's up 18%. And, this period has been quite a marked difference in terms of how our revenue growth is translated to profit. So our profit before tax is up 68%. And that's really the fact that our operating margins have improved. So we're now getting that operational leverage. So where our revenue's grown at 27%, our overhead cost base has only grown by 5%. And that's why we've delivered better margins. And again, just one of the main drivers for that, we talked about this time last year. We're looking to control and make selected hires in terms of our headcount. So, we've had a significant recruitment drive over the last couple of years, but we've largely built that team now. As Gordon says, there's been some strategic hires, and that will continue. But we look at staff costs as a percentage of revenue. That's 25% this year, which compared to last year was over 30%. So that's how we've been able to get better operating margins. For those that follow a kind of ROCE-based profitability metrics, the other thing to draw your attention to is those higher profits being achieved by a similar sort of asset base or infrastructure base hasn't changed hugely. We've invested on it, but the depreciation's offset that. So we're getting better return on capital employed. And again, as we move forward, we believe there's scope to get further operating margins in the next couple of years as well. Okay, so I think again, in terms of cash, it's all positive and it's all moving in the right direction. So operating cash is up about 30%. We've had a similar level of investment. So we are a CapEx business. We put infrastructure on the ground, so we're always going to have that element of CapEx. So the CapEx spend's been about 4 million in terms of PPE. That's normally relatively consistent. So it will cost us around about £10,000 of CapEx for every £1,000 of recurring revenue. But we'll get that recurring revenue over a 5-year period. So that's the kind of typical payback. The intangible assets. So as Gordon says, we're still building product. We're still building Prox and Exchange Cloud, and that's been a similar level to last year at 2.9 million. That's largely our internal software development team, which we've built, and that'll be relatively consistent in the next year or so as well. It's been a good period in terms of paying down debt. So we paid down about 2.4 million of debt, term loan and asset finance. So we're actually only left with just over £1 million of asset finance. So we've tidied up the balance sheet quite a bit over the year, and ultimately that's allowed us to end the year 2.2 million up in terms of net cash. So we're generating cash now, which again is a position that we've not been in for the last few years. Again, I think in terms of what we're going to do for the current year, it's kind of going to be similar. Right, we're investing, but also having an eye on operating margins. So things like security, it's obviously key for us. We don't scrimp on security budgets. We got SOC Type 1 this year, and we're going to invest in SOC Type 2 for Proximity Exchange Cloud. So that's part of this year's investment. Again, we will continue to invest in infrastructure, although we have just under £2 million of stock. So so that should fulfill part of the pipeline this year. We will continue to develop Proximity and Exchange Cloud, backed by customer demand, feature functionality with that development team. Gordon's talked about the analytics offering for machine learning, and it will be incremental headcount. So maybe be more than last year, but we're budgeting sort of 10 to 15 heads, no more than that. But on a call of an extra 10 million, which is the kind of consensus forecast this year, 10 or 15 heads, that will still enable us to deliver those better operating margins. So ultimately trying to balance investment and cash generation with margin improvement is where we're at as a business. Over to you, Gordon. I think you might be on mute, Gordon. Yep. Still mute. Yep.
Can you hear me now?
Sure, yeah.
Sorry, folks. Jeez. Okay, so thanks, Fraser. So just to kind of reiterate some of the key messages we've talked about. So historically, we've been relatively consistent, as we've said, 20 to 30% top line growth. Business is cash generative, and as Fraser said, we're going to concentrate in ensuring that continues and increases. We've now got a lot of strategic partnerships, strategic references and case studies that we can utilize to, win new clients, expand existing clients. And cloud technology in capital markets is not actually showing any signs of slowing down. There's still a lot of workloads that will eventually move to the cloud, both in the trading and front and back office of trading environments, right? So we're in a good market segment that's growing and will continue to grow for a long time, yeah. So what are we working on in 2025? Pipeline's strong. It's stronger than it's ever been. I think having been burnt a little bit in the past year, exchanges and banks take a long time to do anything, quite rightly, because it's big decisions, big stuff. The focus is to get the pipeline converted into orders and deployments, and the pipeline is way strong enough that if we can convert it, then we're more than happy with the numbers that are out there in the public domain. So we continue to build feature function into Exchange and Proximity Cloud. We continue to automate the private cloud part of the business rather than continually throw people at it. And, we got a big project on automation and how we streamline and make our deployments and our security and our patching and our maintenance more efficient. That drives down cost, right, and keeps costs under control. So, and we are investing in the AI ML side of the analytics platform. And doing all of that, is to grow not only the top line, but the bottom line, right? We are now been around 12 years. It's time to generate profit, generate cash, which we've shown we can already do. So outlook, again, as I say, a lot of workloads in capital markets still run in-house, still got a long way to go. We work with a number of banks who are just beginning their cloud journey, so it's a good area to be working in. Get significant opportunity through Exchange Cloud to become the de facto standard here, right? And by doing that, the size and scale of the business, by doing that alone, the size and scale of the business will change dramatically. So we're profitable, generating cash. We've got a strong pipeline ahead. We've got a lot of next year's numbers already delivered because of the recurring revenue model, and some of the deals that we signed last year already hit the numbers this year. So we've got good visibility of the year ahead. Been a huge increase in the Exchange Cloud pipeline, and that will continue. So there's some exchanges on a late stage of the journey. There's some, early, some middle. So we'll continue to fill that sales funnel as much as we can. And yeah, as I say, we've got good visibility on the 25 full year 25 number. All right, so that is all of the slides.
Perfect. Gordon, Fraser, thank you very much indeed for your presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the top right corner of your screen. While the company take a few moments to review those questions submitted today, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via our investor dashboard. Gordon, Fraser, as you can see, we have received a number of questions throughout today's presentation. And if I may now hand back to you and kindly ask you to read out the questions where appropriate to do so, and I'll pick up from you both at the end. Thank you.
Yeah, thank you. There's a lot of questions, so I'm not quite sure we're going to be able to get through them all, but we'll try our best. There's some that I'm not going to be able to answer either. So first one, if BEEKS were to win a major contract with highly prominent exchange outside of the UK, might you be tempted or pressurised into looking at a listing on that exchange? Nope. Easy. Changing exchange listing is not something that we're considering. So GSE disclosed on a recent webinar that BEEKS will be providing equipment refreshes within 2 to 3 weeks for customers who knew that. I don't quite understand that question. No, so the GSE contract is 4 to 5 year term. After the initial 4 to 5 years, then if GSE sign another 4 or 5 year extension, then we will do a full hardware refresh of the clients that sit underneath it. But it's not a weekly thing. It's not. No, it's not. So yeah. So the hardware the cost of the hardware that is deployed for GSE is already costed in for the life cycle of the contract. If they then extend for another 4 to 5 years, then we have another set of hardware costs on that refresh of the contract. Well, that makes sense. Will you need to increase technical and support headcount to service the recent Exchange Cloud win? No. We've got a centralized support function that still has scale in it. So no, we don't. There's not going to be a material increase to the headcount to do that. I'd like, again, similar type question. What's additional headcount if we sign additional exchanges? How many additional staff? And do you have difficulty recruiting people? So as I said during the presentation, we are trying to automate. Right, our headcount over the last 2 years has been kind of flattish. Fraser, it's not hugely increased, has it?
Not the last year. 2-3 years ago is when we did the expansion. Yeah.
So I mean, listen, if you go and sign another 3-4 exchanges, there will be an incremental increase in headcount, but it's not like we need to double the staff count. We are investing in automation and ways to take people out of the equation, right? From deployment to support maintenance. So we don't have a material headcount jump in the future. Next question is, you have different large markets with large potential. How do you split your sales resources between Exchange Cloud and Private Cloud? That's a good question. So we've kind of got two discrete sales teams. We've got what we call an internal sales team, and they really look at public-private cloud. And then the folks that we've talked about, so Adam, Jerry, myself, Zach, we work in proximity and Exchange Cloud, more so Exchange Cloud myself. I tend to be involved at the later stages of some of the bigger discussions. So yeah, that's a split. A kind of internal team that does the small stuff, and then the face-to-face folks in country or in territory that do the larger relationship type selling. Do you have the right senior sales hire to capitalize on these opportunities? So sales resources, I'm a commercial guy is my background, right? So I never wanted to have a massive sales force to manage. We've got a good team. We're looking to add maybe one more, and then I think we're about right sized. And once we sign the exchange, it's up to them to sell it to their clients. So we effectively get an indirect sales team that is owned and managed by the exchange. So it's a good model. So AI question. So AI is a growing trend in enterprise IT. How can you ride this trend? So I think we've kind of answered it, right? We are looking at an at the edge AI real-time analytics package. right, and I'll kind of leave it at that for the moment. Can you explain what a large exchange can do in revenues at maturity? Is pricing still $1 million a cabinet? Is it realistic that a large exchange at maturity could have 50 racks? Yes, and all the above. It's roughly $1 million per cabinet over the 4 or 5 years, and there's no reason why a large exchange couldn't have 50 cabinets within 4 or 5 years. Next question, what is the outlook for future revenue growth, particularly in full year 25, and how much comfort in terms of backlog or sales pipeline do you have? And again, I think we talked about it, right? Without going into things that I can't put in the public domain, right? That's confidential, market sensitive. We've got a recurring revenue model. We had deals we signed last year that we'll deliver into this year. So I think we've said that we've got good visibility for the year ahead. Question from Paul. Can you talk about the size and scale of the payments business opportunity relative to other business streams? Listen, we do have it in payments. We've got a couple of larger clients in payments. It's not an area that we can differentiate that much in. So it's not going to be capital markets, trading infrastructure is always going to be our main area. Payments is nice and interesting, but it's not the core of the business. Never will be. So next question from Stephen. If BEEKS offers a point-to-point immediate service for exchanges, what did the exchange do before BEEKS came along? Or is it just white label aspect that's so appealing to the exchange? So a good question, actually. So an exchange would sell you data center space in a data center, but that's just an empty rack. So they will charge you anywhere between $3,000 to $10,000 a month for power and space in their data center, and then the client had to go and do it all themselves. So they had a service offering. It's called colocation, right? But it's not cloud. So, and all exchanges will continue to offer colocation because there's certain clients like tier 1 HFTs that will never use our platform. So exchanges will never stop offering colocation, even though they license Exchange Cloud. It gives clients a choice between the two. From Tim, how many exchanges are currently talking to and how many in the final discussions? Can't go into that, I'm afraid, Tim. Stuart, for the uninitiated, what's the origin of the company name? Fraser, I don't know if I could ever.
I wouldn't say that publicly, no. I don't know.
Do it, find out yourself. It's not difficult to figure out. What is the expected launch timeline for the Mystery Exchange Group? I wish I could go into more detail, but we're under NDA, so I can't, I'm afraid. Just, you need to look out for announcements as and when. ARR was 20 million and a half year with an additional 500k added in August. Annualized growth of 10% from half year. Do you see that rate of growth increasing through the year? Yes. Easy. It always does. Our annual monthly run rate is the key metrics, and it increases almost every month.
Yeah, so that's the one that the annualized committed that's grown on just under 20% for the year.
Fraser, do you want to take the next one? Alan's question about.
I think he's asking about overheads. So staff. I think the question is, what's your overhead cost? So staff costs about 7.4 that's the majority of our admin expenses in our P&L. So the total is 9.7 and the 7.4 staff. So that's the biggest element. The rest is things like travel, the cost of being on AIM, audit fees, legal fees, all those types of overhead costs.
Andrew, we've got a lot of questions. Appreciate you can't be specific. Would you be disappointed if one of the large exchange cloud contracts mentioned in the results was not awarded before the end of the calendar year? I'm not going to answer that. I've answered things like that before, and then I get slaughtered for it like a year down the line. Gordon said this, so I'm not going to answer that. what potential? Why, with potentially a couple more exchanges signing, what then stops you being bought by hyperscaler? I don't listen. I don't think a hyperscaler is an exit, right? Maybe I doubt it, but too small. I mean, I think we've always been honest. There'll be an exit at some point. Still a way away, but whether it's a hyperscaler, I would doubt. More likely private equity. Are there specific factors in South Africa driving GSE adoption that may not be present elsewhere? As I kind of covered, it's difficult to do business in South Africa if you're not a South African company, right? You don't have an entity. Customs is difficult. It's a difficult. I would, even South Africans would admit it's a difficult place to do business in. So, but a lot of that is just an emerging markets problem, right? So it's not. I wouldn't say it's specific to South Africa. I think it's more generic to emerging markets where, certainly Western organisations don't have the infrastructure they do in Europe and America. GSE has been a real success. We don't hear much really NYSE. To what extent has the NYSE partnership been a success? So you got to remember the NYSE partnership is, it is NYSE, right? But it's ICE Global Network, so it's the service provider part of NYSE. We continue to have discussions with NYSE on other things. It was never going to be massive for us. It's not like they don't enable it in the NYSE data center. It's third party data centers. So it is what it is. We make a bit of money out of it, but we continue to have different other discussions with NYSE that might be more material going forward. Andrew, I can't answer the question about the exchange cloud contract we're under NDA for, I'm afraid. What are the key risks the company anticipates in the coming financial year in terms of market, regulatory, or competitive challenges? I mean, it depends where you're asking, right? Competitive, we always keep an eye out, right? But we don't see anyone kind of starting the journey to try and compete in the exchange cloud space as of yet. Maybe that will change. Regulatory, we don't, we're not that highly regulated as a service provider, cloud service provider, right? We've invested a lot in SOC 2 and security and a load of other certifications to allow us to kind of get through and onboarding. But that's a difficult question to answer, so I'll move on. Thierry, do you see potential multicast outside the stock? Nah, not really. Outside the stock exchange vertical? No, not really. Yeah, I mean, multicast is not a new thing. It's been around forever. It's very suited to financial markets. Given the latest referenceability for exchange cloud, will pipeline close faster and the sales conversion move faster? I like the question, George, and we do hope so. We are seeing signs of the sales cycle shrinking. They will still be long because exchanges are exchanges, right? And banks are banks. There is certain process and procedure that we just had to follow to. But the more we get, the more we become the standard, the easier it becomes. How long have you had? How long have you left? I don't know if I can go through and pick. So a lot of these kind of questions are repeated.
I think Ian's asking if we it could be argued the resistance to innovating software, financial markets, and the 2.9 increase in intangible assets should come off the bottom line. I think that's, should we expense our development costs? We follow the accounting standards on that. If we're building a product that we've got useful economic life out of, we're entitled to do that, and I think that's the way we'll continue to do it.
How many? So one from Steve. How many new exchanges can be added in any 1 year? I mean, I would say 3 to 4, like that. That feels like because we you got to continue supporting and growing the existing ones, right? So 3 to 4 a year, and that's that more than happy if that we're doing that every year. One from Matt G. Could you comment on customer concentration? I mean, we have a very large client, a very large ISV, more of a strategic partner than a client. We spend a lot of money with them, they spend a lot of money with us. That revenue stream from them is probably capped at the moment. Like they've got all of the banks and brokers on a platform that they're probably going to get. So, it will probably fall to below 20% of revenue over the next year and a bit as we continue the revenue growth in other areas. Last one. Your growth rate should accelerate. Your growth rate should accelerate, driven by growth across 3 product lines. Is there a ceiling to the growth rate that you can achieve? Is there a ceiling to the growth rate we can achieve? No. I'll answer it simply with that. If we have to grow faster, we will hire people, we will buy more infrastructure, we will do what we need to do, right? So there's not a natural clip. So that's most of them, folks. There's a few more, but they're kind of repeating earlier ones and ones that are, as I say, I can't answer due to NDAs and all sorts of stuff. So I think that is us.
That's great, Gordon Fraser. Thank you very much indeed for addressing all those questions from investors today. And of course, the company can review all questions submitted today and will polish those responses on the Investor Meet Company platform. But before we direct investors to provide you with their feedback, which I know is particularly important to you and the company, Gordon, could I please ask you for a few closing comments?
Yeah, of course. So listen, thanks for joining, folks. Thanks for listening to us again. And I think we've had a good year. The forecasts suggest we're going to have another record-breaking year to get there. We've got good visibility. The business is doing well. We've got a great team, strongest team we've ever had. Some real good customer referenceability and a pipeline that a few years ago we would have died for, right? So we're in a good place, and we've got hopefully another good year ahead. And we look forward to it.
Fantastic. Gordon Fraser, thank you once again for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of BEEKS Financial Cloud Group PLC, we would like to thank you for attending today's presentation, and good afternoon to you all.